Hello and welcome back to the channel. I'm Charles Crillo and I'm an onboarding specialist here at Ally Payments. And today we're tackling a question that can be a real head scratcher for some business owners. Why am I considered a high risk merchant? And if you've ever been told this, you know it can impact everything from your payment processing fees to even getting approved for a merchant account. So let's break down what high risk really means in the world of payment processing. So at the core, being labeled high risk by a payment processor or bank means they see your business as having a higher probability of experiencing financial losses. And this could be due to increased chargebacks, potential fraud, or just really the nature of your industry. It's not necessarily a judgment on your business's integrity, but rather an assessment of statistical likelihoods. So what are the most common factors that can land you in this category? Number one is your industry type. So some industries are simply deemed inherently riskier than others, regardless of how well you run your business. Think about it. Industries like online gambling, adult entertainment, credit repair services, or CBD products, even travel agencies, these often face higher scrutiny. Why? They might have a higher potential for chargebacks, stricter regulations, or a history of fraudulent activity within that sector. Number two is higher chargeback ratios. Now, this is a massive red flag for processors. A chargeback happens when a customer disputes a transaction with their bank, essentially reversing the payment. So if your business has a really high percentage of chargebacks compared to your total transactions, it tells processors that customers are frequently unhappy and there might be issues with your products or services, or even you're experiencing a lot of fraud. And processors lose money on chargebacks, so they're very sensitive to this metric and really following it and making sure that your business stays under 1% and even lower than that for most industries. Number three is irregular or large transaction volumes. So if your business suddenly sees massive spikes in sales that are out of character, or if you regularly are processing extremely large individual transactions, that can raise an eyebrow in the eyes of the processors and banks. And this isn't always a bad thing, especially if you're legitimate, but it can signal potential fraud attempts or a business model that's prone to sudden, significant losses if something goes wrong. Number four are subscription models and recurring billing. So businesses operating on the subscription model or using recurring billing can also be considered high risk. And while this is incredibly convenient for customers and businesses, recurring payments can also lead to more chargebacks if customers forget about those subscriptions. They have trouble canceling them, or they dispute the charges they don't recognize. So processors want to ensure you have clear cancellation policies and good customer service to mitigate these issues. Number five is poor credit history. So just like applying for a loan, payment processors will work and look at your credit worthiness, and a history of bankruptcies, defaults, or a low credit score can indicate financial instability, making you a higher risk in their eyes. And they want to know that you can meet your financial obligations, and that also means providing the product or service that you're selling, but also if there's any chargebacks, you're able to cover those. Number six is new businesses with no processing history. So sometimes simply being a new business with no processing history can put you in the high risk bucket. Without data to show your reliability, processors err on the side of caution. It's not personal, they just don't have enough information to assess your true risk level yet. This is often a temporary status that can change as you build a positive processing history. Being labeled high risk doesn't mean your business is doomed. It just means you'll likely face higher processing fees, potentially stricter terms, possibly a reserve, and sometimes a longer approval process. But knowing why you're considered high risk is the first step to mitigating those challenges. So if you found this video helpful, please hit that like button, subscribe for more business insights, and let me know in the comments if your business has ever been considered high risk and why you think that was. We love hearing your experiences. Thanks for watching, and I'll see you in the next one.